Welcome to this video today. It's Sunday, it's the 8th of October. Now, in terms of what we're going to be looking at today, we're going to be looking at two chart formations, AUD, USD and USDCAD. And we've done two previous videos on these pairs. And we're trading the long side of the US dollar. Both trades are going nicely at the moment. However, we think there's several hundred more pips in profit, hopefully, to come. Now, in terms of the techniques that we're going to be using, when you look at the charts, we're using very simple charting techniques. But what we're going to be doing is backing up our view of the chart by looking at the sentiment of traders via the COT net traders positions. Regular viewers will know it's our favourite tool in Forex trading. If you don't know what it is, you can get more information on the link beneath this video. If you just want to watch the video through right now, just keep in mind we always want to trade with smart money commercial hedgers when their positions diverge from large speculators. Now, what I'm going to do is start by looking at USDCAD, and we're going to look at the COT net traders first. Okay, we're on the chart of the Canadian dollar against the US dollar. It is the COT report, so you get the foreign currency first. So we're going to reverse it round in a moment. Obviously, we draw our levels to USDCAD. Now, just in terms of, for new viewers very quickly, what we like to do is the commercials in red, smart money hedgers. We like to trade with them when they move aggressively against large speculators. Now, on this chart, what we can see is here at this major bottom, the commercials build up a really big long position. The specs are really short. We see a nice move to the upside. Commercials, though, when we get up here, start to shed their longs. They think prices have gone too far, and they're changing their hedges. They're going heavily short. The speculators who've been burnt in this move on the way up, okay, with their shorts, decide to go long and build up longs here, okay. They're at a 5-year extreme in terms of their longs. Actually, the commercials are at a 5-year extreme in terms of their shorts. And yeah, prices have come down a few hundred pips. However, there's more downside to come in our view. If we look at the positions of the groups this week, they flatline, okay? So basically, you've got no real change. That the speculators still want to hang on to their longs, and the commercials are not moving their shorts. And this, for us, points to a continuation of the USDCAD moving to the upside. So let's go and draw some levels on the chart. That's the Canadian dollar now. We've got the chart the right way round. I'm just going to go through where I think the US dollar could be going. And I think there's still plenty of upside potential. But just for new viewers, very quickly, how we've been playing this trade. Now, what you get here is a big fall in the USD. And that's to do with the Bank of Canada hiking interest rates. So the market takes that as bullish for the Canadian dollar, sell the US dollar, but they overreact. They then look for more rate hikes to come and just push the US dollar down too far. Now, even if you don't know the fundamentals, okay, you know, if you look at the COT, the commercials have started to buy aggressively as we come through 123. And the specs are to a 5-year net short extreme. So that will alert you, if you don't know the fundamentals, to the potential bottom in the USD. So this candle here goes through the 121 level, bounces back. So comes back above this low. Then we come down to test the low again. Can't get through it, or the 121 level. Then this candle is significant. Poke through 121. Can't get through that candle tail. Selling is exhausted. We can go long 121.65. Now, the great thing about COT is you don't need to be too fancy with your charting. We know that we're, probability wise, we're probably going to get a good few hundred pips. Ordinarily, we'd look for the 20-day moving average to provide resistance. We said at the time we thought it would give way, just too many specs short. A little bit of a battle on these three candles. We push up and then away, and then we sort of move higher It's a kind of gentle move up at the minute, but it's a decent move from 121.65 to around 125.40. Now I see more upside to come, and I've highlighted the last two COT reports. So I've said, yeah, basically the specs are flatlined. So here they've got that really big short position. Last video we were saying they're going to get run on stop, or some of them are, break up, move up. Then on this report candle here, the specs have got the same number of shorts again. So they're going to get run on stop in our view. So off we go again. So despite the move up, the specs do not want to give up their short position. They're just going to get run on stop in our view. So where could we be going? Well, I think we get through 126. The obvious resistance, said it in the last video, is here. So many specs short. This level isn't going to hold. You've got, obviously, sorry, get my mouse. Your resistance up here at these four candles, which is 127.80. Okay, I think we'll be going to that level. But because the specs are just holding those shorts and not giving up the position at all, I think we'll easily get up to 130, possibly even 132. Now, in terms of it breaks higher, I'd go with the break. But what happens if she comes back? I personally think you've got support there. Strong support. I don't really see too much of a dip in the USD. Obviously, we'll have to see how it pans out. But any dip for us is a buying opportunity with a stop behind the 20-day moving average. If we break higher, you want to let it clear the round number, 126.30, something like that. I think we'll be going higher. Just tuck your stop behind the 125 level. So in our view, plenty of upside left in this one. We'll obviously see what happens. Obviously, you can follow my view in the member centre on a daily basis if you wish, of course. Right, let's move on and let's have a look at AUDUSD next, and we're going to start with the COT report. Dollar against the US dollar daily, just to show a couple of divergences for new viewers. Here's one. Speculators nice and long, commercials go against them. You get a nice decline around 500 pips. Another one over here, about 500 pips. This one over here, you can see it. It coincides with the speculators being their longest on the chart. We've seen a break so far of, I suppose, about 300 pips. Now, this week, both groups have dropped their positions slightly, but the divergence is still really big, and we've got a lot more downside to come in our view. So let's go and look at the charts and look at some levels of entry, stops and targets and so forth. Chart of AUDUSD daily. I'm just going to quickly go through. I've been playing this for new viewers. Then we'll look at the potential downside in the Aussie. I still think there's plenty more to come. Now, if you look at this chart between late July and mid-September, there's not really much going on. It's pretty low volatility, bit of down, bit of up. It's pretty, nondescript, so to say. However, the COT will alert you that there is possibly going to be a breakdown in the Aussie. And it comes here as you see these blue candles go up, okay? Commercials increase their selling above 80. Specs increase their buying. Specs have got their eye on this candle here, take it out on a close basis. And we think it's going to fail. It fails here. You go up, there's no more bars, we exhaust, and then we sell the next day for a move back to the 20. I thought the 20 was going to break. We bounce, come back to it. Then we find support again at the 20, and we think, actually, you know what? It could pop higher in the short term. We'll wait. So scratch a minor profit. This candle here, though, is significant. She pokes up again. Can't get as high as this candle. Exhaustion of buyers. But she still finishes positive. So we still want to wait for some weakness. And because we found support at the 20-day on these three candles here, we think that would be a good level to come in through, okay? So what happens? We immediately come through the 20. It's a nice red candle, big one. And we now think, right, that's it. 20 should hold. Blue touches it, can't get through. This red has a half-hearted attempt, finishes lower, and then we sell off to the downside. Now, we're at about 77.70, so it's a couple of hundred pips profit. And yeah, what do? Do you bank it or do you hold? We think there's more downside to come, but we don't rule out a bounce. And I'm sure regular viewers will know my view on what to do here. You bank 50% of your trade out. If it runs onto the downside, you're still in. You've still got the potential to sell a downside break, or you can put the 50% back in at a better price. So my view is a little bit oversold in the short term. Yeah, we've come off the lows. I personally think we could rally possibly to around 78.50, sorry, 78.60 even, or maybe a little bit higher to 78.80. Just have to see how the rally goes. If you wanted to get in fresh, obviously sell and then tuck the stop back behind the round number, 79. Well back from that number if you're coming in fresh, 79.35. So you sell up to the first level of resistance, and then you stop back behind the 20-day moving average. What if we don't break higher? My own view is if you're coming in fresh, drop in half a position, half your normal size, and then you've got the facility to drop in another half, okay? You know, okay, from the COT, there's still plenty of specs short. And in terms of the COT, I've always found the divergences in the Aussie and the US dollar to be the really, probably the best of the COT divergences. That might just be my experience, but you always get big breaks when you get big divergences, and they're decent. They're normally not like, okay, it's 200 pips odd at the moment. They're normally 500 pips, okay? Where are we going? I did say in my previous video, 77 is the first level of support. My own view is we will overrun that, and yeah, we're going to go down. Going to go down to at least 75 in my view. Probably even 74. But if it gets down to 75, I think I'll be happy enough with it. If we do start selling off to the downside, obviously what you want to do is trail a stop always back behind a round number. Okay, so to give you an example, say we sell off through 77, your stop would then be through here, or behind here, 78, say 78.35, a good few pips back from the round number. Personally though, I think the Aussie will have a little bit of a bounce first, and I think she'll be going to the downside. We shall see. All right, that's my review of AUD USD.